Yay! Welcome everybody. This is it. Fed decision day. So much news, we love it. It's one of our favourite days, all these news events together. Plenty of opportunities to scalp, plenty of opportunities to grab some pips. Most traders haven't got a clue how to trade this or steer away from it, close all their positions. We at Mohawk Forex Scalpers, we teach you how to trade it, how to win, and how to use our axe trading system to get in and out of all these news events, which are the quickest way to earn pips. As simple as, because the market moves in quick spikes and we trade it rather than avoid it. And today is fantastic. As you can hear, we've got Bloomberg on in the background. They're all getting excited about it as well. For those of you who don't know what's happening, we've got in 9 minutes, we've got the US retail sales news, which is a good one to get in on pre-market. We always trade the reverse on this, pre-market of course. It's backed up by import-export news and the New York Empire State Manufacturing Index, which is quite cool as well. And retail sales, excluding all car sales as well. Then we've got the open, which we'll trade, and we'll trade the news. We'll go the market in the direction of the news if it's a powerful enough result. And then we've got the NHAB Housing Market Index for December, which is always a good one as well. And then 30 minutes later, we've got the gasoline and the crude oil stocks change, which we love to trade as well. And then the big news, 7 p.m. UK time, 2 p.m. New York time, is the Fed interest rate decision and the projections for the following years. And then the press conference. So this is news, and this is what a lot of stocks and companies are waiting for, by which point we'll have already earned our pips and money. And if you're really a high risk trader, you'll look to trade as the Fed is making its decision, around 7 p.m. UK time, 2 p.m. like I say New York time. We sometimes do, sometimes don't. Depends how much money we've bagged away by trading all this. So we'll just keep an eye on Bloomberg as well, obviously. We're going to be trading US-30 as always on our 3-minute time frame on our axe trading system. If you want to gain access to this trading system, me as your mentor as well as other guys in the group, then go to www.mohawkforex.com. All the information on how to join our trading group is in there. And we're just a small trading group, trading most things that people don't trade, showing you how to do it safely and how to earn those pips in a short space of time. Well, most people are looking at setups, we're done and dusted for the day. On average, we try and be done within 90 minutes of trading. Today we're going to do a longer live stream because there's a lot of news events and I want to be around to catch it all. We've got coffee, got nachos with cheese on, melted, beautiful. And that's all I need as a trader to get in and out of the market, as far as I'm concerned.
Politically, he didn't want to offend anybody. He needed their approval, given it wasn't certain he was going to be reappointed. So,
as you can see, in fact, we just got 3 sells on US-30 just before we came on air. We managed to catch this drop here from our RSI and the price action. So we just got 3 cheeky little wins on that, which is pretty cool. I'm just loading up my broker, which is IC Markets, always IC Markets Global, which is my favourite for scalping. Yeah, I mean, them 3 trades there, they weren't, I mean, it's just, they were $25 each basically, so that was, quick $75, kind of bonus trade. I got out because we approached our support zones and also we're close to the news, and obviously we want to be edging on the news here. Now for gold's obviously taken a massive dive, struggling to get anywhere back near to its 1800 kind of average level that we've seen for the last year or so. You can see it's right up here on my chart. So we are really in a range, as you can see. Our axe trading grid is telling us that we're trapped in this range here, but we're still looking for 100 pips, 10 pips on the news. And remember, with gold over the last few months, pre-market, it usually goes with the news as opposed to reverse, and we switch it up on the open. Again, it's not every single time, but majority of the time that's what we get. So we've got it loaded on TradingView, as you can see here. If the news is good, we're going to take a buy. If the news is bad, we're going to take a sell, unless we're right plumb on our trading system line here, then which we'll just wait. We'll go in that direction, but we will just wait until price action breaks those lines. That's the safest way to do it. So US-30, like I say, is shaping up for kind of a nice W pattern, as you can see here. Let's come here, it's retested our trend line, bounced off. We want the news to be worse than expected on this retail sales, and it's assumed to be already from the previous month. It's down from 1.7 to 0.8, 15.9 from 16.3, and 0.9 from 1.7. So, and again, on here, 0.9 again. So everything's already priced in as a drop. Import-export might have some impact on it. But what you want to see, as I keep saying, is all the news events, you want the majority to be one way or the other. And that's, you know, if everything here is lit up red, obviously it's a sell for gold and we're going to take a buy on US-30 and vice versa. And that's what we do. It doesn't mean that the market isn't going to go that way, but we just want to catch that initial manipulation spike where people are trying to catch out people who set pending orders. And that's why we don't do pending orders, because we're looking to do what the banks do, go and do the liquidity grab where they take the market the opposite way to what everyone expects just for a bit. That's enough to wipe out a lot of people's accounts who set pending orders. So we're trading as the big boys do, and that's what it is. So we're getting those spikes, getting that money, we're taking our liquidity, and then we don't have to trade, or we can, you know. So we're looking to trade the manipulation on the pre-market before New York opens, and then we trade the way once we've seen price action move to a level. We take the trade in the correct way of the news in reverse for gold on the open. That's kind of how we do our fundamental trading. But it all depends on the result, of course. If the result is as expected, then again, I'll probably look to take a sell on US-30 and a buy on gold. Like I say, because the market, as I keep saying, says, pats itself on the back and says, "Ah, we got our estimate right." It's been very rare these days that they do that, but it does happen. We've got 3 minutes to go. Let's have a look at US-30. Shaping up nicely. We're just going to get US-30 up on our chart. Broker. Majority of the time I end up taking trades just on my phone, buy and sell. I don't really look at the broker in terms of the chart and the analysis. I'm looking at TradingView, as you can see right here. That's how I do it. I don't want to be skewed from my analysis by looking at different brokers with different prices and etc. But IC markets is pretty good and usually pretty quick at execution as well, which is obviously the most important thing. If it is worse than expected and we're looking for a buy, you know, we're looking for 100 points though, which is easy attainable, as you can see. We're going in on kind of 0.5, five lots on IC markets, but it's actually 0.5 with a margin of 670. So we're trading with about a $3,500 account on this setup, just so we can accommodate any drawdown, and obviously we can enter at our preferred lot sizes, so we only need to get 100 points. That's how we kind of work it all out, and that's the stuff I teach everybody in the trading group, people who want to learn you know, correct lot sizes, correct account sizes, correct brokers. You know, it's all different, and a lot of people don't teach you that, and that's why they end up coming unstuck. And I know, because I've been there trading a few years, and I've been there and done it all. So we'll stick on. We'll watch gold actually as well. We'll watch both of these, US-30 and gold. Can split my chart, but I like to see it on the big. I've got a few screens, but I like to see it like this, especially for YouTube. Let's have a look. Get ready. So we've got about a minute to go. We're just going to have the countdown.
From New York City,
in London, in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
From the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as
Here we go. Here it comes out. NY is looking good. UTO real sales are down. Exports down.
Negotiating power. Do you feel like the pendulum shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
Import-export prices, but it's looking, it's all pretty. Waiting for the last one to drop.
Need to catch up? This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights. David, you just hit the nail right.
Look and see. There we go. There's your spike.
Instrumental.
And that's the way you run good risk management.
We need to invest in our system.
38.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Perfect. Right. Let's see what we get. Love the manipulation on this. Post that into the group so everyone can see the chat.
Why we explain Build Back Better the way we do is to convey exactly the areas to the American public where it will lower costs. Childcare is a huge cost burden on a lot of families across the country, and it will have an immediate impact next year.
Jen Psaki there, the White House press secretary from New York City this morning. Good morning.
Old rocketed up. Look.
Your equity market down 2 on the S&P. A 2-day losing streak. Monday into Tuesday into Wednesday. Will it become 3? Just a little bit softer. -0.0.
We're going to start at the top.
Into the bond market, going into the Fed. 143.77 on 10. Euro-dollar positive.
Pulling back now. That's this. Good. You entered a sell initially on this. Doesn't matter. You just hold it now.
Down about $1 on the session, down 1.4% to 60.75.
Hold.
Overnight, Tom, yesterday evening, a little bit of a spat with Senator Warren and Elon Musk. Senator Warren saying, let's change the rigged tax code so the person of the year will actually pay taxes instead of freeloading off everyone else. Elon Musk on Twitter, let's just say he had a lot of other things to say, Tom, but this is where the substance might be. Elon Musk saying, if you opened your eyes for 2 seconds,
all the retail sales news, look, you can see, was worse.
Don't spend it all at once.
We're already in profit on gold. Just going to take that now because that's a good one. Thank you very much. Just wait for US retail sales. That was good. Nice drop on gold. There's your sell.
The other thing to say is that the senator from Massachusetts has a lot of societal.
Pull back a bit more.
When she makes those statements, John,
got 27 and 33, so we got about $100 there on those 2 trades. Nice and easy. Again, just sold. I just sold straight. Yes, I was in drawdown for about 80-90 as it shot up, spiked up. I know it was going to drop. Like I say, the manipulation on the news, and it happened. So that was a good one.
Some sort of spat because she knows Elon Musk's personality, and the fact that this is such a polarizing social issue at a time when the Democrats are supposed to be pushing through the Build Back Better plan before Christmas highlights how tenuous that timeline really is.
And I think what gets lost as well, Tom, is a debate about taxing
and US-30, look,
and a debate about taxing individuals.
It's going to drop.
Large pools of concentrated wealth, the top 700 people in this country. They're 2 very, very different stories.
Yeah, well, stories, but it's not 1 or 2 stories, John. It's 6 or 7 stories, and the confusion of tax policy
going to go up.
has always been there, and is one of the reasons nothing gets done. Let's get something done here. Emily Wilkins joins with Bloomberg Government.
See if this.
Emily, there's a Fed meeting today. It's single. It's focused. We'll have coverage.
It's going to get to that KG line. Look, as you can see, I'm going to put my EP across there, so we'll just Bang.
focused
There we go. Again, that should be our 100. There's the entrance. That you got 120, 130. So we're going to hold on this. Bang. There we go.
About the financial future and really tying that back to
Good.
President Biden's social policy and tax bill. I mean, a lot of the questions going to be, does he feel comfortable moving forward? Does Senator Kirsten Sinema feel comfortable moving forward? Because at this point, it doesn't look like they're going to make Majority Leader Chuck Schumer's deadline for Christmas.
They have the power. What are they given so that they support the senator from New York?
I think to a certain extent,
There you go. So all the retail sales were down. Only just.
They're not going to see inflation rise. That they're not going
0.3. That's quite a bit. 0.3. 0.2. So you had your import export, which is medium impact, better. Obviously, it's the retail sales we're focused on. And now we've got an hour till the open, so we'll see what we can get scalping. Again, we're waiting for this to pull back up. We'll take a buy once it's crossed into our line here. Well, then obviously looking at sales again on gold as well. So
Emily, to determine what exactly is in this Build Back Better plan, or what actually is going to be there.
See, we're in about $50 drawdown on US-30 at the moment. Fine.
Response is so interesting is because there's a divergence between social warriors.
For gold, this is great because I love getting the sales on the top of that spike. RSI hit 670 before dropping.
How much does the message that Senator Warren?
So this time it's gone against the news initially, but it still gave us our win going with the news on the drop within this spike. That's all you got to do. And I was just, a quick 100 points and I was in and out. I would just watch this. So this is going to play out. I've got this in US-30. And you can see the pattern. US-30 now. Really want this to.
The state and local tax deduction debate. The reason that the senators are looking at potentially capping the income of who receives this benefit is
support zone.
Don't want to be accused
then
of giving a tax break to the wealthy, and they're already
that's
of that. Republicans and conservative groups are running ads accusing Democrats.
So it sets up nicely, and then obviously we'll take the sell on the open as well. But we might get more sells here if this drops down. Again, while we're waiting for the bigger trade, we're not opposed to taking the trade, but it's not enough. 62. You don't really want to be scalping that, so I'm going to leave that alone. I'm posting this into the group so people can see.
That was implemented under President Trump. That's something that's still being discussed, and one thing we don't talk a lot about here, but really factors into this, is the Senate parliamentarian, the one who has to go through this entire bill and say, yes, all of the provisions in here meet the requirements to be passed under the reconciliation process. Reconciliation is not for everything. It is for things that have direct links to spending and to revenue. And if you don't have that, which is what some of the immigration provisions this year ran into, you don't get to be in the final bill.
Obviously, my stop loss is here.
Tom, I know there's a lot
Below the previous spike. This is my zone, my stop loss. So you put in a long position.
They pay about 40% of federal income taxes, Tom, and anyone earning ordinary income, they believe they pay their fair share, because if you earn a certain amount of money, Tom, it's 50% plus in some places. And this is why I think it's really important not to conflate ordinary income with income from elsewhere and the income of, say, the super rich, the billionaires in this country and elsewhere, and what they pay versus someone paying ordinary income. We talked about the bonus pool, Tom, up at the likes of JP Morgan and Goldman yesterday. Could be up 40%, 50%. You ask those people what happens to that cash bonus, Tom, when it comes to what happens to it.
I'm aware of what happens.
That spike, always it.
It'll be cut more than half. The issue here, John, in the shell game, and people have written about this, it's not an original idea, is politicians love to focus on one tax at a time. Our viewers and listeners don't have that luxury. They have to look at a summed tax. Forget about
you bounce off that heavy resistance zone. You could put your stop loss here, but obviously what you want to do, you don't want to be spiked out like this. You're better off to, as price comes your way, just move your stop loss obviously down. You can adjust it. But in terms of a stop loss, that's where it wants to be now. And
traipsing through the Mankiw estate over 50, 60, 70 years.
Pay your fair share is a line that, of course, works on a campaign trail, Lisa. I think what we failed to do is go the next step. What is fair? What is your fair share?
And is that ultimately the motivation behind this bill?
We can get out before that. You don't have to hold, obviously.
Substantive in terms of infrastructure, whether it's social and creating some sort of network for new parents, etc., or is it to equalize the playing field in some
Keep
sort
these
of
on.
theoretical talking point way?
Have a look at
That,
silver.
I think, is a key distinguishing feature.
Silver, beautiful W. I mean, that's
Like most things,
perfect.
it's complex. It's a complex issue and not treated as such a lot of the time.
You're very sensitive today.
I know, Tom. Just one more day. Just got to get through it.
Hmm.
From New York City on radio and TV, this is Bloomberg.
That's a great move on silver. So we're in profit now on gold. Go, just got to hold, you see. Don't want to be spiked out. US-30, we're just waiting for that. Again, it's always slow, this pre-market. You get these initial trades, which we did. Like I said, we've got about $100 on the initial one there. You know, so I mean, today we've taken because we did a couple of trades in the Asian session. I was 200, which we won. As I on my YouTube stream last night, they hit target. We got about $200 on that trade. We took 15 trades so far today, all winners. So you know, totally fine. So we're well in profit for the day, and we're in profit nicely on gold now. See it coming down. If it touches our KG line, I'll probably end the trade. And I'm out. There you go. Done. Job done. Job done. And that was 24 and 22. That's another 50. Sorry, £50. About another $80 on the sell on gold, because we can go again. We take our profit. There you go. You can see it hit the TP. There you go, look. TP hit.
That's a very important thing that we frankly have not successfully done across most of my life. You know, I've been waiting for this legislation for months since I became transportation secretary, but various presidents have been hoping to reach this day for decades, and it hasn't.
There you go. Look at that. Smashed it. Perfect. See? So all this is just manipulation. You know, yeah, you could trade it. You've got to stick to your plan. Don't change your plan just because you see something, do something different. You know, I always used to trade gold the opposite way when the news came out, and I do on when it's in the market, but without it, it's more likely to drop. But this is all wick hunting. This is all, you know, manipulation. So, and you know, it's just wicks. It's not the actual structure. It's actually hit our heavy resistance and bounced off it. So yeah, I'll put the sell in here. And bang, there we go. Now we'll see if we get any more. We'll see if it comes down any more.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more. We have an enormous...
If it goes red, my neutral zone, you know what to do. We can get rid of this now because that's done. Okay. Already hit. This is good to do it live and show people how you can do it and how you've just got to not panic. Have a system like this, you know, you can trade fundamentals without any system, to be honest with you, but you have this as just to give you that extra confidence and to know where the structure, what the structure's doing. And you can see big W structure, and now the news had its good momentum. Now it's pulling back, like I say, because the news was bad. You see, news retail sales.
Negative 0.06% on the Nasdaq, a little lighter, softer, lower, negative a third of 1%. We're down 47 points or so. Coming into Wednesday, 2-day losing streak in the equity market.
1, 2, 3, 4 red against 1 green, year on year. That's what we looked at. This is a bit of a mixed news result, I must admit, compared to some of the others. But you've got to have a look, and you could have gone green and taken the buy and stuff, but then you've gone the opposite way. So there's different ways looking at it. But once I've got my strategy set up in my mind, how I'm trading, I stick with it. I don't change it. So I'm always looking for the reverses of pre-market and to go with it on, and that's the key to it, is sticking with your trading plan and not changing it. All we're waiting for now is US-30 to move. Let's have a look. The next news is obviously the housing news and this business inventory, so we'll look at that. We've got the open in 45 minutes, but we're just looking for US-30 now. Look.
With nominal growth as high as it is, and yields at 144. Switch at the board and finish on this one in the FX market. Cable, sterling, where are we? Positive at 10.
I'll just watch this for a minute and see what they're saying.
Over in the UK, 132.49. Tom, after the Fed, it's on to the ECB and the BOE. Will the Bank of England make a move? Most people right now.
What do you think? John, I've been out of touch on this. What's ECB going to do? How do they follow Fed? The answer is they can't. Their hands are tied.
Completely different conversation.
Yeah.
This is about flexibility of the asset purchase program and how much flexibility is carried over from the emergency pandemic purchase program to the traditional one. And what does monetary policy look like through next year? Tom, they want to remain accommodative. This Federal Reserve's having a different conversation. The Bank of England somewhere in between. I thought they were going to hike last time around. That's been punted now into next year. For the likes of Goldman and SocGen, anyway, this Bank of England, Tom, I can't depend on it. I've got no idea what they're going to do tomorrow.
Right. Are you really going to turn to Arsenal and West Ham like halfway through the press conference?
Well, I'll be here, Tom. So if the team can put it in one of the screens,
we're going to put it
I'll
in
watch
screen.
Arsenal West Ham.
Okay, well, that's good. We look forward to that. Right now, our first conversation of the day of serious weight. We will speak to David Kostin of Goldman Sachs. We will speak to Kenneth Rogoff of Harvard University. Right now, Alan Ruskin, Chief International Strategist at Deutsche Bank. And Alan, congratulations on a trenchant note, your note on the terminal rate. What is the terminal rate, and why should Jay Powell focus on it?
Well, Tom, the terminal rate's really seen as the peak rate for Fed funds in any particular cycle. And it's critical in this point because the market's expecting a very low terminal rate in the order of about 1.5 to 1.75%. And if you think that the Fed's peak funds rate is going to be 1.5 to 1.75%, then there's no way that the 10-year yield is going to back up particularly sharply. And if the 10-year yield doesn't back up particularly sharply, then monetary conditions won't tighten very much, and the equity market will prove pretty resilient as well. So all asset markets are tied together with where the terminal rate is.
Your Matthew Lazzetti has led on this. It's been one of my great themes. Good morning, David Stubbs over at JP Morgan as well. Alan Ruskin, do we underestimate the overlay of technology on gauging where the terminal rate is or should be? Do we know the technological path of the next decade that we have to try to get to in that terminal rate?
I don't think so, Tom. So I really distinguish between the terminal rate and the long-term R star. So you can have a low
US-30.
star that relates to
Look at that. Spiked up.
Technological change.
Nearly, I mean, that should have hit our TP, to be honest with you. Look, you can see there, look, zoom in.
But I think in terms of this cycle,
Just about. With a spike. Just wait for the RSI to creep up. Once it gets into the neutral zone, it'll be good to go. And US-30 is always slow this time of day with any kind of news event. And like I say, I'm going to be looking to go the opposite direction once the market opens. So if I'm in a trade, obviously I will close it out beforehand.
You talked about how unusual it is to have nominal growth as high as it is right now, and to have yields and rates where they are at the moment too. Just how unusual is that, Alan?
There's no historical precedent for nominal GDP running at, say, 11% Q4 and Q4, which is what we probably will get with the GDP numbers. And
RSI spent so long in the red. I'm always looking for the next correction, which was like here, and then here,
Treasury market. So there really is
and even here, look.
close to this, John. which then also begs some very important questions, because I think a lot of
Gold
people
look
are gonna
continued.
say, well, wait a minute,
RSI, look at
yield
this.
curve, which has been such a reliable signal, is going to invert
You're
shortly.
right on a points of interest line now, hence why it's ranging. So there's only 36, so it's kind of dangerous trade now. We took what we need to took out of that. We got four. Yeah, we've got 4 wins on that, which totaled around about $200. So that's totally fine. That's all you want.
There is a belief that we stop at 175.
Like I say, gold always performs better pre-market with news. It's kind of weird, but you know, it's less volatile and dangerous in a way than actually US-30. US-30 is doing its usual thing. Look, dogeing around, morning star. You know, so it's price action move. Now it's just in a range, gets undecided. Obviously, waiting for all this news and the Fed and everything. So, but we were just hoping to get a little spike up just to clear this. Give us a nice little trade.
So even then, if you just took a 0 real funds rate, you would have, you know,
RSI's got to be in this zone, and then it will be a trade.
Almost a minimum. Now, I think the last
Silver still pumping up. You see, they don't always correlate, silver and gold.
this core PCE
Nice.
above 2%. So the Fed wasn't fighting inflation.
So we'll take a buy on silver if it reaches that 75. If it breaks. We just want 100 points on silver, don't we? Yep. 50, so that could be good. Let's have a look. Wait for the RSI, because you can see it's hit previously. It's hit that level it's on now, then backed off. So let's see if it pushes on up.
But I think the market's underestimating perhaps the sort of general story that relates to taper. They're not treating taper as any sort of tightening. And
RSI 71.
Tightening, because if you look at the flow of funds and you look at the role the Fed has played in financing the public sector deficit, it has been absolutely critical. So, you know, just as that taper gets accelerated and the Fed's role diminishes, I think you will see term premiums start to pick up. But I think the more important story from the bond market is less the term premium side than the risk neutral rate. I think the risk neutral rate is the thing that's going to have to go up, you know, substantially. That risk neutral rate is, you know, essentially the expected funds rate.
Given the fact that you seem to think that the signal coming from the bond market is highly messy at best, and that it is not accurate in terms of a portrayal of the overall economy, do you think that Jack Ablin over at Crescent Capital came on earlier and said that the bond market is smart money is no longer correct, that the bond market no longer can be a signal for equities in the same way that it once was?
Yeah, I think it is problematic. I think what you've had, I think people underestimate this, is and you don't see Fed officials talk about this sufficiently, is this drop of helicopter money. 25% of GDP's worth of M2 balances dropped into the system, that essentially creating bubble-like...
The RSI 65, see, dropped now, look. The people who don't believe, love trading this kind of support and resistance on the RSI, they could put a line across it, look, see. So I would take a buy if the RSI breaks that level, because it's already kind of 1, 2, 3, 4 resisted, regardless of price action. Names here, look, 1, 2, 3. So if you're looking to take a buy on using the RSI as your key indicator, you'd want it to break that level and know it's a new level it's going to form. Same as here, look at that, see? RSI just hasn't got into an overbought zone on silver for a while, so it did oversold. Here, look, here's where you would have got a re-entry and got a sell, and you could have got a sell here and here, so there was plenty of opportunities to sell, and obviously when it broke here as well.
About emerging markets. Is that the great unknown for 2022? Is all this Jerome Powell
Back on US-30, still doing its range.
Do not have the degrees of freedom that America has?
Yeah, I think the emerging market story is complicated. You know, I think there's a sense that if we get through the early stages of Fed tightening, and particularly if the Fed does what the
so we've got about 40 minutes to go till the open, so we'll just start watching.
Can trade better in the second half of 2022. I think in the end, it's still going to come around to this story about the terminal rate. You know, if the terminal rate is substantially higher than what the market's priced in, then you know, EM is still going to have a hard time of it.
Alan, just wonderful as always, and good to hear from you, sir. Alan Ruskin at Deutsche Bank. Tom, one of those conversations that when I get home a little bit later this afternoon, I'll have to lift him back to. Just absolutely brilliant about just how much work this Fed needs to do, given the economic backdrop right now.
We talk about glide paths. Peter Orszag, I give great credit for this idea of glide paths. And there's multiple glide paths, John, that any monetary policy leader has. And they glide out to this so-called terminal rate. My distinction is it's about economic growth at the end of the day, and the machine has worked in America. Maybe it's a fiscal stimulus, maybe it's not. But what's so unique about this Fed meeting, John, is how alone America is in relative prosperity.
One question I think for a lot of people going to this Fed news conference, this Fed meeting, Lisa, is just where the hawkish surprise comes from. We've been talking about the dot plot making a shift higher. We've been talking about the taper accelerating much more so. Where does the hawkish surprise come from?
Look, Alan Ruskin and Bill Dudley both pointing to the longer-term expectations, the dot plot, in terms of whether they'll shift up the longer-term expectations. But what Alan Ruskin just said there about basically the bond market not any longer being the smart
Good to me about selling on gold. You could have scrubbed this for 3 pips. Not worth it, and now it's in a range, stuck in the neutral zone. And again, you don't really want to be taking a buy unless we get a break above here. This is typical of gold. Once it's had that news, just wait. We will look to take a buy on the open.
Right here on Bloomberg.
As well, backing off now. Again, as a sell, if it breaks here and goes red, it's sell time.
The US death toll from the coronavirus pandemic has now passed 800,000. That's according to data by Johns Hopkins University. More than 200,000 of those deaths occurred after vaccines became widely available last spring. The US has the highest reported death toll of any country. One of the most widely used vaccines in the world, China's Sinovac, doesn't provide enough antibodies to neutralize the Omicron variant. That's according to researchers in Hong Kong. Those findings may have sweeping consequences for millions of people who are relying on the shot to protect them against COVID. The House has voted to hold former President Trump's last chief of staff in contempt of Congress. Mark Meadows has refused to testify in the Capitol insurrection investigation. He's turned over emails and other records.
You can look at the news that's coming up, so you know. So on this, look, the monthly poll of home builders, Wells Fargo Housing Market Index. It's quite a cool one. Higher than expected figure is positive for the USD, obviously, and negative. So it's predicted 83.83. If that is true, and the consensus is as predicted, same as last month, then we'll look for buys because it's good news that they got it right, and take sales if it's obviously the opposite. Yeah, we'll go the opposite way with gold. So this would be always a good one to trade. Always find. Business inventories month on month, again higher than expected. And this is what you want them all to correlate together, regardless of what the news is. If the news, like I say, as we saw on here, it was almost a split decision. But I just think retail sales, always know retail sales always override import-export prices. Otherwise, you know, we could have gone the opposite way and still won. I mean, you know, pick your strategy, you'd have still won doing the opposite way to me. The whole point is entering, knowing which way you're going to go and doing it, because most people don't know how to trade news or what it does to the markets and stuff. So, you know, like I say, I'm a manipulator trader pre-market, so that's what I love. Like I say, you could have read this the opposite way and still won. You know, the whole thing is, it's all, if the information is all here for you free, it's learning how to use it is what we teach in Mohawk Forex, you know. But for me, the retail sales were all bad apart from the year on year. The month on month was way down. So that's why I decided to buy US-30 to go and sell on the gold. So, and it doesn't always work out, obviously. You know, nothing's 100%, but the majority they do. So, as you saw, we got the 4 wins on gold. We're still holding on US-30 at the moment. You can see it's dropping, it's ranging, but you can see there's been no massive big move. It's ranging around this area because it's waiting for the open. Now, we'd usually do get some kind of movement 30 minutes before the open, so the next couple of minutes we might get some kind of move, so we'll keep an eye on that.
The working week will be 4.5 days with
Finish my coffee.
being a half day. positioning itself as being an international hub.
You can see that's a hammer. So you've had rejection, 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 top and bottom.
What do we know and what don't we know? Because there's a lot of speculation.
We want this to push up. Look, if it crosses that 30, 32, then we're in. Go, look. Be higher, crosses the, sorry, into the 44, 45. That's what we want. Bit of green. 44 looks like it's going to cross. Look, it's getting better. And because I've seen price action move like this, you know, quite often you're asked to end the trade, even a small loss, or end it in a little bit of profit. You don't have to hold to hit that TP. Now, this is what I hate. I don't even like using this because I hate anything kind of preset. I'd love to hold, you know, and go for these certain levels and stuff and everything, and my Axe trading system, to me, is as good as it gets in terms of doing that. But I'm also a cautious trader in that I like to take my money and get out and then prepare for the next one. Like I say, you can be a trader like me who does multiple trades and gets in and out quick, or you can be a trader who trades 3 or 4 times and holds and waits for the result and has a set stop loss and usual way. Neither is the best. It's just what suits your personality, the time you've got to trade, you know, in the day, whether you're working or whatever, you know, and how you and what you like to do. So for me, this kind of true scalping, as I call it, has worked for me for a long while now. So and for other guys in the group. You've got a grey look for the first time into the neutral zone. Then we're going to get a little green, a little push up would be nice. If it hits our TP, can zoom right in.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is really about reaching the unvaccinated, and many policymakers have given up, so they continue to boost the people that are already vaccinated, but that's of much less value than getting first and second doses into people. And
There you go, there's the spike, look at that. That's what I'm saying, at 30 minutes before the open, you always get this big move. It's crazy. You know, and just learn to hold on to it. Bang on, look at that. 9 AM.
On this Fed decision day, 2 days of losses, Monday into Tuesday into Wednesday. It could become 3. We're negative a tenth of 1%. A lot of work to do.
Love it. I love watching the price action.
Down about 4 points on the S&P. Elsewhere in the bond market,
Big rejection.
144.28 on 10s. Going into the big one later this afternoon.
We're in the big one now, Jonathan. We're in the big one now, mate.
And say you went to India. That's in Mumbai, and it's a fancy 6-star hotel. That's the one John goes to when he goes to India. Bhakti Ansari is something different. She is world acclaimed on going where others don't. And Bhakti, I'm not going to pronounce a name because I'll just kill it. But we are thrilled to have you here as you were north of the Ganges, somewhere south of Kathmandu. What does the real India look like in this pandemic?
The real India looks like real rural America. You know, there's fear, high rates of unvaccinated individuals, patients coming to the hospital confused, scared. And there's a real fear after what India lived through during the second surge that it's all about to start again. And they're getting ready and getting prepared to be able to fight.
So I mean about having a decent stop loss, you see. If you'd set it, you've got to go below the last low, swing low, especially using Hakanashi. Otherwise you'll get this spike out. And that was purely what I call 9 AM or 2 PM spike. Always happens every day. Really weird, 30 minutes before the open.
Improving supply chain, providing vaccines with adequate shelf life, ensuring that those vaccines reach that last mile, that last village is really key, and that involves.
What we might do is, I mean, depending if it stays like this, obviously on the open we're going to look to take the sells, and then we'll hold the buy because it will swing both ways, as we know. So if it remains like this, where I'm in like $30 drawdown or whatever, then I might just hold it and wait for it to spike up, wait for it to spike down on the open, then back up again. You know, we just adjust our pattern.
Which was terrifying by all accounts, by the images that we saw, and I'm sure
All
by
of
the
that,
aftermath
like
that you witnessed. What does that look like?
a perfect,
Omicron variant based
almost
on
perfect
the
double
initial,
bottom.
evidence that we have?
Good. Zoom out a little bit.
So luckily for us, what we're seeing from South
And
Africa
post that
is
again in the group.
infection is common, hospitalization is common, less patients are requiring oxygen. Now, what we saw in the second surge in India was that a lot of patients died from critical hypoxia and lack of oxygen access. Oxygen access in India has been significantly strengthened, but there are other policies in place. They're improving border control, improving same-day rapid testing prior to travel, and all of these innovations will help, the spread of the virus in going to those rural, underserved areas.
One confusion that a lot of people have, myself included, is how much less virulent the Omicron variant is. We don't have concrete data showing that. But the real issue here is, when does this move from a virus that we need to counter and social distance for and mask and vaccinate repeatedly versus a common cold, versus something that you're going to get every once in a while. It's not going to be fun, but you get over it. You live, you move on.
So I really try to think about, what does it mean for a virus to be endemic? So scientifically, an endemic virus is one that has predictable variations, seasonal variations like the common cold, that its impact on the health system is manageable and bearable and acceptable to society. And the third is that the number of people infecting another person is one. And we're not there with COVID. We know that these surges can have catastrophic consequences on the health system. We're already seeing in the United States several hospitals claim they have no more ED beds, no more ICU beds, and our resources are outstripped. So I think what my concern is, by calling this endemic, that there'll be a complacency that'll set in, which I think is unnecessary, because still deaths that need to be avoided in our future.
Based on the trajectory of the pandemic, when will we get to that point, Dr. Hansadi?
I think it's soon. We are now expanding vaccines. Vaccine uptake has improved in the United States in the recent weeks. We are really expecting the youngest in our society, the under fives, to have access to vaccines very soon. And as the virus continues to evolve, we do think while transmissibility will increase, the virulence is unlikely to continue to increase. So I'm really saying, like, next Christmas, we will not be having this conversation. I will not be on the show, I hope.
Oh, no.
I heard that 12 months ago, Tom.
Yeah.
We do scientific research here, and the needle goes when you're on. So, no, you'll be we expect you to be talking about the 2-year yield in 2 years. Bhakti Ansari of Johns Hopkins, thank you so much.
Doctor,
Go
thank you.
away.
Tom, China, a big issue here as well. The data overnight was disappointing. There's a concern about supply chains.
Yeah.
Just look at the data coming from initial lab findings on the Chinese vaccine. It doesn't provide sufficient antibodies in 2 doses to neutralize the Omicron variant, and boosters will likely be needed to improve protection. And we know the threshold, the tolerance level of the Chinese Communist Party, Tom, and local authorities is very, very
Nice range still up.
what we see in the West.
Is this a dismal decade for the Chinese? You look at the different overlay of stories, John, into the science of this. I think you're dead on. I think there's not been nearly enough talk of adults like Dr. Hansadi or amateurs like us about the variance of all these different shots, pills, things to come. Some work, some don't.
I was saying the economy, Tom, there's been a shift in the last week. Lisa, just in terms of expectations, the conversation has really shifted around China.
Yeah.
The belief that we could have a stimulus push here.
That basically the People's Bank of China is not willing to tolerate some of the weakness that they're seeing, especially as it hits the property sector harder and harder. There's a company, a property developer, that ran into problems that's actually getting more concerned than the Evergrande situation, not because it's bigger, it's much smaller, but because it's highly rated. There is a sign of contagion that continues to be ongoing, and their hands kind of getting called.
And we know COVID zero is basically essentially unachievable.
Exactly.
Yet they seem to be the last man standing when it comes to that effort, Lisa.
Well, a lot of people saying that how much does this have to do with the Beijing Olympics? How does it have to do with how they want to message things ahead of a number of key Communist Party meetings? And after that, they might relax. But what's the damage in the meantime? And what are the tools that they are willing to use to really counter that?
And what does that mean for your assessment of supply chain improvement through 2022? We'll talk about that in the next hour. Your market right now, just to reset, get you ready this Wednesday morning.
Me, John.
Good morning, Tom. We're down about 2 or 3 points on the S&P. Can we go back a few decades and hit reset, Tom?
Never.
Before it's too late. 144.45 on 10s. I think it was the 40s that set the trajectory for TK.
Yeah.
Is the music playing?
Can I tell you about retail sales?
Of course you can, Tom. 8:30
so
Eastern.
Afterthought is like totally into like influencers, if that's how you pronounce it. She goes to me, I need a black sweatshirt that says Celine on it. I'm like, she saw some guy with it. So I'm outside Celine yesterday and I can't get in, John.
Yeah.
And the door opens. A police officer opens the door and there's Tabitha. I go, Tabitha, how much is the Celine hoodie? And she told us the number.
Okay.
The police officer fainted.
This is how Tom gets me back. Tom knows that there's a certain someone with a Celine hoodie in his wardrobe.
The police officer hit the ground.
この短期間に一気に上がってしまったので、正直きついのはきついですね。
And there we go. We're done. Look at that. Perfect. US-30's hit our TP. Nice one. We did that live. Excellent. Look, it's time. There you go. US-30 finally hit TP on the from there. There you go. Sometimes you have to wait. What do we have to wait there? We waited 30 minutes, 40 minutes in the end. That's part of the longest trades I ever like to hold. But there you go. Just shows you, look, there's no reason to end the trade. There's no reason to panic with the trade. We knew there was going to be this spike around 2 p.m. New York time. The RSI was telling us, hold your horses. They had a decent stop loss. There you go. And there was your nice kind of 100-point win. News. That's where we entered the trade. Buy, took the drawdown, took the profit, drawdown, profit, drawdown, blah, 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 and then bang, hit target. Right on the flat part of our KG line. So perfect. So a nice win again, live, all based on the news. Okay, not the quickest trade, but a winning trade. And again, the risk reward, you can see it's never great. It's the way it is, but it's got to be what it is. It might break this. I mean, it should break this, and we should obviously get to our next level, which would be
Start exploring to see what's moving the markets.
kind of here.
Visit Bloomberg.com webinars.
from here. This is ideally what we want now as a second TP, so we can stretch that out and see. But again, on the open, we're looking to take the sell. We're going to go the opposite way in 15 minutes anyway before we get this. So we'll get rid of that now because that has been a successful trade.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
I just want everyone to know that I am being bullied in the commercial break. Just so everyone knows, from New York City, for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. We're down about 2 on the S&P, Tom. Your Fed decision, hours away.
Well, the VIX 22 shows that, and of course the bond market here has been, John, you mentioned it nicely, that it's just been there and churning, and Alan Ruskin talks about the terminal rate. John, there's a backstory here for 2022, which are the EM challenges Mr. Ruskin talked about, and you see it in Turkish lira, John. I rarely editorialize. I'm doing it right now. Short lira on a log chart is absolutely textbook. John, the trend there is horrific.
Getting close to 15, and what a move it's been. You bring up EM, Tom. We've had the hikes from EM this year in a big, big way outside of Turkey, of course. I'm looking to Brazil and elsewhere. And looking ahead to next year, Tom, that's the question, isn't it? Is it DM's term?
They are defending their currencies against the shocks of pandemic.
So 50 minutes to go. I'm just going to grab a drink.
True, open economies, etc. But more than anything, John, the shock of what we're going to see this afternoon at 2 o'clock, they have to adapt to Jerome Powell.
The focus shifting back towards the Federal Reserve, Lisa. The expectations as follows: an acceleration of the taper. 2 dots showing hikes next year, or rather more dots than that. You know where I'm going with this. 2 hikes next year, 3 hikes in 23. Where does the surprise come from?
And I think that's a great question, especially as some people throw the balance sheet on the table. How concerned are they about inflation at a time when their other developed market peers are not as concerned? I do wonder, I was kind of smiling when you talked about emerging markets and then moving to developed markets. So what would you call the Bank of England? EM or DM?
Oh, the currency certainly behaved like an EM currency at times.
Beautiful, look at that. Beautiful spike up.
Most people would still assume, I think Governor Bailey would refer to his central bank as a developed market central bank.
Nice push up, look. RSI, 57. If it breaks that line, it could be a cheeky little buy before the open even. Remember, we're going to take sells, so let's hold fire on this.
It really creates a tension for them that's similar to the emerging markets.
I promised you a phoner this morning,
I know.
Didn't I?
Yes, you did.
I promised you a phoner.
Absolutely.
Tomorrow morning, if they hike interest rates, I'll get on the phone and say I was wrong.
With video.
And that the year ends tomorrow and not today.
In a Celine
Futures
sweatshirt.
unchanged on the S&P. Can we let the Celine sweatshirt go? Come on. I don't insult you guys for what you're wearing. I think Tom looks beautiful in a bow tie. I think you look great too. What's wrong with the Celine sweatshirt?
In all honesty, I look like a hobo when I walk out of here, so you can make fun of me.
Thank you.
Okay.
Futures unchanged on the S&P. Your bond market unchanged too at 144.28. Just a bit of tension in the room going into a Fed decision, Tom, a little bit later.
Tension in the room. There'll be tension there for the Eccles building as well. I mean, there is a tension in this dynamic of taper and rate rise as well. And John, we've got to remember our wide set of experts really disagree.
We're going to catch up with an equity market view in just a moment, Lisa. That equity market is still pretty close to all-time highs.
Which is really shocking considering the idea of a potential hawkish surprise from the Federal Reserve. Is it an equity market that is accepting the risk and looking past it to earnings, or is it basically just not waking up?
Again, just rejected out of that zone, but all good. Like I say, we've ended our trade. We've got no positions open at the moment. We are about 10 minutes away from the open. Like I say, I'm looking at gold, which again, a bit rangy, but it has formed a kind of a W. But on gold, we're going to be looking to take the buys. So the more this pushes down into the neutral, the better. We're looking for 100 points on the buy.
FOMC statement followed by a J. Powell press conference at 2:30. Where is the surprise going to come from, John? A very good question that you continue to ask, and really a lot of people are wondering whether
That's the retail sales. See there, look.
The acceleration of the tapering, trying to end it perhaps in March or April. But when will they start?
We took our profit on. So now we'll set a level. We've got resistance here. Look. So you know, you want to be around about here.
ex-Philly Fed President Charles Plosser.
Just as a gauge, doesn't mean I hold for that, but it just gives me an idea of where I think price might reverse to.
Have taken a starkly different tone.
Sorry, rather. So I'm looking for 100 points. 83, might go 50. I'm going 2 trades anyway, so. And then like I say, US-30. We'll see if we get a drop and a pump first, so we could extend this back down. Again, just 100. It's not going to change the shape of our pattern of trading, because it's just going to be a spike that we're looking for to catch from here. 100, as you can see, down to there. Look before it pumps back up again. So we want to be kind of there. Look, that's what I'm looking for on this open. And then we'll be getting ready to trade the housing news, business inventories. So we'll stick on US-30. Higher this pumps, the better, because I want that drop. 100 points.
That's why you see the equity market at near all-time highs, despite the fact that bond yields are where they are. I think what the concern in the marketplace is that by having waited this long, the Fed is already at risk of having overreact, and I think that's where Powell's going to try to reset the narrative here, hopefully starting today, by trying to make the argument that by accelerating taper and starting that rate hike cycle earlier, he can proceed at a measured pace. If he threads that needle, I think you can see the yield curve even steepen a little bit. But that's a tough sell because credibility is not abundant right now. So I think that's the task before him, and it's not an easy one.
Steve, I want to talk about the great bull market we've had since Christmas Eve of 2018. Ben Laidler, your entire team at Federated have participated with us. Folks, these are stunning numbers of a great bull market in pandemic. SPX up 108%, Dow up less. NASDAQ 100, tech laden up 177%. Thank you, Mr. Cook. Steve, what is the courage it takes to be in the market to enjoy 18, 19, 20, and all of 21?
Yeah, I think, and you're right, Tom, it's not always easy. And there's certainly times where you doubt yourself. I think you've got to be able to take a longer-term view and not get lost in the most recent headline. COVID's a perfect example here. You've had waves that have come. You've had, positive headlines, negative headlines. If you're just following the next headline, you get lost at sea. So you have to have a framework. For example, for us, we've used an earthquake framework. The initial shock is terrible. It's deadly. It's damaging. The ground does shake again, and those are dangerous, but they're aftershocks. And each aftershock, tends to be a little less severe. And you've got to be able to take that longer-term view. And so far, that's served us well. Now, at some point, that's wrong, and you got to get more defensive. As we look at the current cycle, it's hard to envision that time is now, when we're just at the dawn of a Fed rate hike cycle, and certainly not well within it. So I think you're going to see some volatility forthcoming that you're going to have to invest through, and it's going to spook some people out of the market. And our bet is that that's not the right thing to do here.
Well, will it actually spook some people out of the market? You say this, as a lot of people say, we're overdue for a 10 to 15% correction. We've been overdue for one for probably about a year now, according to many different analysts, and every dip is buyable, and then now their dips are getting smaller and smaller to 2%, and that's a buyable dip. I mean, at what point does that paradigm change, or do you pile in on it?
US-30, look at that, following that beautiful W pattern. Great. Now we can just raise our TP a little bit because we're still only looking for 100 points. Not being greedy. That's all we're looking for. So we're looking kind of down to here now. So you can just raise that.
5% of your money on fire every year, and I think it's that dynamic that pushes people into
Hopefully we'll get a down to the downside, take our TP, then it goes up again. That's kind of what I'm looking for. Not a reversal in the market as much as a manipulation on the open, all down to the news, and it'll change again for the next news release. So
then I think you'll see a different dynamic. But right now, it's really hard to see where else money can go and just not get eroded away by these kinds of inflation numbers.
Steve, is the year over after today?
That's a good question.
I'd love to think so, John, because frankly, I'm looking to take a little bit of time the last 2 weeks. But the fact that I've got that on the calendar means that we'll have some fireworks in the last couple of weeks.
It's always the way, isn't it?
It's always the way that it works.
You guys have nailed it, I'll tell you.
Steve Chevreau, just fantastic this year, sir, and thank you for everything you've done with us over the last 12 months. Steve Chevron there at Federated Hermes. Tom, hoping to wrap things up after the close a little bit later.
We're going to wrap it up, and we're going to try to do some travel in the pandemic. We can talk all show about that. John, we've done some serious work here. I called up Bruno DePure, our wonderful quantitative giant here at Bloomberg, and I said we need an adjustment to the dot plot. Lisa, this is very important. This is the dot plot that matters this afternoon.
I'm so scared.
And what you do is you got to look at the classic Celine polka dot shirt. This is a crepe de chine polka dot print. And this clicks in at $1,300.
How much that is?
So, for a woman that wants to keep up with someone else,
That's not the men's range then, Tom.
I think it is the men's
That is the men's range.
Yes, that's the men. Probably someone would own this as well.
People are going to start thinking that's what I wear on the weekend. Just to clear things up, that is not what I wear on the weekend.
Oh my God, that image is gold.
Do you want to talk about the actual dot plot, Lisa, and what's expected a little bit later?
We can move on, honestly. Yeah, we could try to shift.
We've got about 5 minutes to go.
I want to talk about inflation. There you go.
Checking our broker, making sure we're all good again on US-30 and gold. And then we've got the news coming up in 35 minutes, but we're going to trade this open first.
What is your size?
They don't make anything that fits me. Trust me.
I'll get you back, sir, big time. Tom Keene.
There's nothing on Madison Avenue.
Lisa Bramwitz and Jonathan Ferro. Your equity market unchanged on the S&P.
I tried, John.
144.63. I tell you what, this show has a real year-end feel to it, doesn't it? Fed decision coming up a little bit later.
Al from New Jersey is going to say this is the end.
I have no doubt about that. A beautiful one in New York on radio and on TV. This is Bloomberg.
Brilliant, and we just bagged a little cheeky buy on US-30 just before the open there. Oh, just fancied that. I was in and out. There you go. I just grabbed that.
The House has voted to raise the nation's debt ceiling by $2.5 trillion, trying to extend the government's borrowing authority past next year's congressional elections. It also averts a potential default. The Senate passed the measure earlier, and it now goes to President Biden for his signature. And the Biden administration is considering whether to impose tougher sanctions on China's largest chip maker that would build on an effort to limit Beijing's access to advanced technology. Meanwhile, the US reportedly will place 8 more Chinese companies on a military-industrial complex blacklist. One of them is drone maker DJI, that's according to the Financial Times. One of the most widely used vaccines in the world, China's Sinovac, doesn't provide enough antibodies to neutralize the Omicron variant. That's according to researchers in Hong Kong. Those findings may have...
Good morning, good morning, good morning.
Good morning.
What's going on, brother?
Well, we're just getting ready to trade the open. We're just going to look at catching the news the right way. Just going to see if we can get... Just got some wins on US-30, 4 buys, and we've got 4 sells on gold from earlier. So now we're looking to go the opposite direction. Got 2 minutes to go before we put any trades in. Try and catch a 100-point pullback on US-30 and try and catch 50 to 100 on gold on the push up after it's doing spiking, which it's doing now. Look, so get ready, and then we're going to trade the housing market index news in 32 minutes, and then we're going to trade the crude oil, the EIA version, and then we'll be back later on to watch for the Fed interest rate and the decision, the big one. So it's been a packed news event. Yeah, it's been good. Good so far.
Good morning for silver too.
Yes. Yeah, silver's
nice smooth moves, man.
It was. Went against the grain, but it was perfect.
Yep. Gold spiking down.
Yep. Just getting ready. Yeah.
In order to cut emissions, Climate-proofing transportation is at the top of the list. 20% of global CO2 emissions come from transportation. 75% of transport emissions come from road travel. And 45% of road travel emissions come from passenger vehicles. 29.4% of road travel emissions come from freight. Of the world's transportation emissions, 11.6% comes from aviation, 10.6% comes from shipping, and 1% comes from train travel.
From New York City.
Some positions in, let's have a look.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
There we go, right, we've got 1 minute to go. Let's switch, let's see. US-30, look at that, banging, hitting our TP already. That's what I like to see. Pushing down at the same time, gold. Going to buy at the bottom here, see if that pushes up.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting?
My size dropping out, so I might get a rejection off here, but that's good. All I do is going to put an extra. It's looking good. I'm already there, already well in profit. Wait for it to all hit that level.
What we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content.
US-30.
And we're open.
We're open, here we go. Let's see, let it fly.
So that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new
Pushing up.
engage in health.
US-30 spiking around, as we know.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses
Waiting.
instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
And we're done.
Figure out what it wants to do around that zone.
We're done. There we go. Bang. So we got 2 buys on gold. We got 20 and 20. So we've got about $65, and we got 2 sells on US-30. We got 32 and 27. So that's about $100. There you go. Job done. 4 entries all done. Print them. Again, could have got a little bit more. It's a bit of a lottery in terms of what it was doing. I didn't actually set a preset level there. I just kind of just watched them go green. But
This cycle you're fighting inflation, so there's even more reason why
there was a spike down. It's going to be more. Again, I'm going to go back in and look for more sales. Look on this in a sec.
Ruskin of Deutsche Bank. Look out for it on Bloomberg.com and on the Bloomberg terminal. From New York City this morning, good morning. Tom Keene, Lisa Brabbits and Jonathan Ferro counting you down to that Fed decision with futures just about positive, up 2 points and advancing 0.04%. Yields are going.
Yeah, look at that drop now, see?
44.80 as we start to think about a consensus view, Tom, going into this afternoon. A quicker taper.
And then gold as well. Look. And this rejection now. We've caught the nice 2 little buys in within that spike.
Tom, with all of that already so well discussed,
right?
Where does the surprise come from?
Well, where does the surprise come from? And then onto the fiscal policy as well. And those are the domestic fares we can talk about here, John. We're going to do that right now.
Perfect. Oh my lord. We're out. We're out. We're out. We're out. Woohoo. Beautiful. Beautiful.
At the University College London at UCL, she holds the court on
waiting for more buys to come in on gold. Just close some trades there straight away while I was talking to you.
Julie, I want to start there as we go to the domestic story in a moment.
What did I get? I got 21 on the sell, 20 and 53 on the sell there. So another $150 on the US-30 sell.
To Syria and
for 3.
Afghanistan. I don't understand with any
3 more sells.
Nice little manipulation. I don't think that drop's going to last.
That's it. Well, it's going to hang on for the next news, isn't it, to break. I'm just waiting for this for a buy. See if this comes. See, wait for it to reject. Either going to be a sell on the 25 zone, or it's pulling back a buy here.
China to move in on a lot of economic projects and for Russia to extend their influence as well.
It's on some serious resistance.
Biden trying to balance a lot of politics in the region around
US-30, look at that. That was great. What a sell.
Which is talks are going on right now.
Just as I said.
With tensions with Israel.
Perfect.
Over the last couple of days, reportedly struck back at a couple weapons of mass destruction, chemical weapons sites in Syria. And this is something that
that's what we said, and that's all based on the news.
That Israel will be trying to do in the future with both Syria and Iran.
One final question on your expertise here: what is the symbolism of a handshake?
Yeah, might be wrong. She's still dropping.
Yeah, the W pattern. Look, you just there you go.
This was pretty notable last week. So
still going to come back.
Between essentially the acting head of the UAE and
just stretched it out a little bit.
This is really coming
trend line now. Yeah, it's good. Because like I say, the news was primarily red on retail, and it was a buy pre-market. It shot up. You see here, we caught this, and then ranged for a little bit. We caught another buy here. We caught a couple of little cheeky sells, and then we entered the sells because the news was bad. So that's what we're done. So gold's not doing anything yet. Look at gold. Woohoo, heavy support now. Now it's on heavy support. Gold. Now's the time to look at putting buys in, as well as entering a sell. So we can go both ways. We can enter another sell if this goes bright red into our oversold zone. I can also put some buys in and a bounce off this heavy support. See.
Increasingly, there is a tension here against with the inflationary backdrop that we have, with trying to clamp down and restrict, whether it's China or whether it's the Iran nuclear deal, and restricting some of their oil exports. How do you sort of view this in terms of the inflation influence?
Well, certainly, Lisa, the inflation influence is going to be cross-cutting, I think, pretty much everything. And we're seeing that in the polls and how much the Biden administration is trying to balance so many of their domestic and foreign policies around that right now. For Iran, I don't think it'll change things that much. That's an area where we've just had such strong sanctions and a lack of coordination for so long, it won't really make a difference. But it does impact how...
Yeah, it's rejecting off that wick.
Chinese pushback on different kinds of products, and especially chips and technology. This is an area where in the past it's been a pretty easy way for the U.S. to push back in very targeted ways, and what they see as certain threats.
A bit of crazy commission, but
as costs in the U.S. increase.
Look at that drop. Ooh,
China's prices
beautiful.
Trade is one reason why we've been able to keep prices low at other times. So there's going to be quite a balancing act for Biden in terms of managing that.
Based
on the RSI.
So far, where is the emphasis right now? The sort of geopolitical strategizing or the inflation and keeping it down?
Loading up both ways.
I think policy-wise, it has to be on inflation. I mean,
Real.
For Biden right now, it's not just a question.
Got 18 and 19 on the buy there. We did, and on the pullback buy that I'd set earlier, and I'm in on the sell.
50% of Americans are feeling the squeeze because of inflation. Over 25% in major ways with groceries and gas and whatnot. So Biden isn't going to be content, I think, to just let that.
Post all the results at the end. This 15-minute scalping session, because then I want to be getting ready to trade the news that's coming up. There's me sell, just ending that now. Bang, there we go. If you look here, that was another $200 just got, so that was 2 buys, 2 sells. Hold.
With Russia going on to say a new version of this policy must be
the cells
union initiative rather than one directed from Berlin.
And part of this year-end is just time marches on. I mean, Merkel over to Scholz and launched in 2022 into 2024.
I always say to you with scalping, even though you're looking for the bigger picture of the buys, you know, the RSI gives us that entry point. So that was the easy entry point there.
It just highlights how
Got to get in. As soon as it goes bright red, you've got to get in.
Like Russia, when they're supplying your gas, when they're supplying the basic inputs for your daily existence. And if you cut them off to try to punish them, you end up, shooting yourself in the foot. And this has been the big concern. How much can Germany push back against Russia, given what we're seeing with natural gas prices surging to
We'll see if there's any more sells, see if there's any more buys.
political significance? And you're seeing this also for the
If our RSI pushes down to our heavy support zone, it's rejected off it, could push down a bit more yet. We can set a TP there.
I agree. The team at Bloomberg writing up the following story, Tom. The Chancellor reiterating that any violation of Ukraine's borders will carry a heavy price for the Kremlin. What would that price be, Tom?
It's got to be sanctions. I'm by no means expert here, but sanctions, they do work going way, way back, and there can be levels of sanctions. That's the area of Dantana.
And we want this to pull back. Again, the news to be not as good, and that will force gold back up again. We're in a heavy support zone, so this might RSI 22. If it gets to 21.20, it comes out of the zone, back in the zone, we'll go back in for a sell.
It's been the surprise for many people of the year so far. How on earth do we
Surprise is I need more coffee. Surprise.
I need to find some. That's what I need.
Oh god. I've tried these new coffee bags. Amazing.
Yeah.
Yeah, I know. Unique. It's like having your own cafetiere French press in a cup. It works well.
Interesting.
I'm dead set against it. Do you go try it? A quick coffee.
May have to check that out. Send me a link.
Yeah.
You get over at Tesco there?
Marks and Spencer's. Oh my god.
Oh, Marks and Spencer's. Yeah.
You know I've got my good tastes. That's it. Yeah.
Yeah.
But it is. I've only bought them yesterday, and I'm just trying it. And literally, it is like having a French press coffee in your cup. You just put the bag in, 4 minutes, take it out. It just smells exactly the same. Then you put your milk in. So you just squeeze the bag like you would when you press the plunger, and that's it. I thought this is, I thought it's going to be rubbish, but it's it's brilliant.
Yep. We spiked out of the oversold zone.
Yep. Yep. So if it goes back in the zone, we'll scalp it again. If not now, we'll just wait for the buys. It's all.
I got a feeling we're fixing our range right before that news event.
Yeah.
A little back and forth action. Which one is it?
NH housing market. Yeah, the housing market and the business inventories. Yeah, it's only a medium, but again, if it moves away from its predicted, you'd get and then we'll trade the oil. Getting on the oil, and then that's it. Big gap then till the Fed, and then we can trade while he talks. Interest rates, I don't know what I think they're going to stay the same. They're not going to hike interest rates up until 2022 or 2023, they're saying. So, but it's while he talks,
not with inflation as high as it is.
That's it.
Yep.
So it's going to be interesting it's a good opportunity to scalp something, bit of gold.
Yep.
That's it. But gold pushing back down again. Looks like it is.
That's spiking right there. I mean, minor resistance and heavy support.
And US-30. Ooh, look at that. Who said it wasn't going to sell at the open? Perfect. I mean, you it would, We got the manipulation. The news was bad for retail sales. We took the buy before, and now we've taken the sell here. Look at that, and that's bodged our pattern, but it is what it is. This is all news led. Really, now this is one big leg. It's great. You just draw it and readjust it. Like I say, not all the patterns are there, but they're not always going to form perfectly. But it doesn't stop you analysing it. And so now we're going to be looking for. Obviously, to me now that's the first leg. We're on heavy support. We're right in the zone. Look, we could have got some extra additional sales in on US-30. I missed this. But
that's the last leg of your M, first leg of your W.
Yeah. Hopefully come back, touch our trend line. Or retesting, either there or there. And then break back up to our breakout zone. That's as good as we could hope for. RSI's 13 now, look, that's ditched. Beautiful, beautiful sell.
People are reflecting on what do they want and how do they want to work and how do they want to live their lives.
It's nice when it's easy to follow. Yeah, gold moved better pre-market, and then US-30 has moved better post-market. But all the direction we've taken is all based on that retail sales news. Now, I'm not saying it's just that's moved it down. Obviously, there's other things kicking off, but that is my strategy. That's my reasoning behind taking it.
Decision day live from New York City on TV and radio. This is Bloomberg surveillance, and here's the price action. Positive about 0.04%
Yep.
on the S&P, on the Nasdaq.
Nice
right now,
rejection
down about a tenth
on
of
gold.
1%, on the Russell, on the small caps, up 2. Positive a tenth of 1%.
Beautiful.
Coming into today, Tuesday, Monday, losses. 2 days of them coming into Wednesday ahead of that Fed decision. That's the equity market picture this morning. The story I want to talk about in the bond market: 2s, 10s, and 30s.
No coffee just yet, but I got some caffeine.
People are too. Lisa, maybe not. I want to talk about where the 10-year has been and where it's ended the year. And likewise on 2s, because there's a story in there. The high of the year on a 10-year yield this year, 177. The
Hoping I can get the last leg of this trip wrapped up pretty quick. That way I can trade full time next week and the following week.
Oh, it'll be perfect.
And we get a steeper curve. The highs of the year on 2s.
That's what I'm shooting for. Hoping to be back and done by Tuesday. Trade Wednesday, Thursday, then they're closed on Friday, and then come back Tuesday, Wednesday, Thursday of the following week.
That many people believe is less tolerant now to the inflation story, a belief they've got to adapt.
Well, they've got to adapt. One of the outlier calls here is curve inversion, where the 2-year yield goes up, John, 10-year yield does what it does, and at some point we get a odd inversion. I think there's a lot of uncertainty within the quiet of the bond market.
Well, this is to go back to the conversation we had with Alan Ruskin at Deutsche Bank, Tom. How much work does the Fed need to do at the front end? How much will the dot plot later capture that story?
Is Bitcoin still in the crapper?
Talk about that in the news conference later.
Yep.
47,000.
Yep. 47. There we go. Look at that. Still coming down.
As well, since they've owned Celine since
My old TP from ages ago. Look at that. It's coming right back down to that level.
Yeah.
RSI's 12 now.
4% on the day. I have no doubt that's down to your free promotion for most of this morning, Tom.
On BTC?
To the board and get to the US dollar. Your dollar index on the year, over the last year, so
47.
the last 12 months, not year to date, we've had a move of 6, 7
Silver looks same.
points. It's a big move. Tom, it's been a big move. Expecting that weakness, we got that strength.
BTC, yeah, look at that.
Tom, it's not that. It's the fact that even with
21 on the RSI when I looked at it.
See, with these signal indicators are really cool. Look, they were bang on. Bearing the bull, the arrows, everything. And there's multiple entry points for a sell, even on a 3-minute time frame. But you're better off doing 15. But yeah, look, this is
and the spreads in BTC on most brokers are ridiculous, so you have to trade that on 15.
Yeah, it is. Yeah, it is. It's crazy. But it's good to analyse it and see. It tried to get back up, retested, touched 3 times, and then bang, down she goes again. Didn't break that. 48,000. Here's your zone. It's got to break this 48,000 pivot. 1, 2, 3, down she goes. You know.
Down goes Frazier.
Yep.
For our radio audience, basically everything is either up or down fractionally or unchanged here on the day. The big event, of course, in about.
No, it doesn't look like it to me.
The Fed decision that's going to drive a lot of this. We saw.
Looks like a sell-off to me.
You nailed this. Netflix, Adobe, and.
Oh, he's on about stocks.
Yeah.
What are your take on the lack of breadth right now?
Well, my take is really what we're hearing out of the
Gold look ranging, you see.
Story right now.
I have been seeing a lot of the economists lately predicting Bitcoin to be devalued. I don't know how much. Of course, I don't trust the people that say it, but there's a lot of people saying it. So
and that was it. I mean, there was just as many people saying Bitcoin was going to be 100,000 before Christmas. You know, I don't trust anybody.
They got close.
Here in the middle of the year, and I think a lot of people are saying
65.
Particularly if we get the expectation that there's some sort of acceleration or signal of an acceleration of pulling back some of that accommodation.
Yeah, well,
all right. Well, you
Peak between 62 and 65.
forward. Some of the bank stocks could potentially benefit. And there's actually some interesting commentary about some of the material stocks. Analysts sort of mixed on this. Some are saying that they could actually benefit here from this new environment, while others are saying maybe not. Albemarle actually getting downgraded today primarily because of that, Tom.
Romain, thank you so much. Really appreciate it. To close here, an important close, and of course, Mr. Boston joining us on our Fed.
The good thing about trading it now is then you're in an established area where it's established market characteristics and key levels instead of being up between 50 and 62,000 where there's no historic data for you to trade off of.
Yeah.
Economic dynamics. Dana, good morning. This is such an important conversation.
11 minutes to go.
To sustain economic growth. What is
Gold pushing back down, trying to.
Forward on real GDP?
Yeah, it's just stuck in a little bit of a range, so I had that move. Nice win here, and now see if it breaks here, we'll go again. Go again.
Certainly, if the Build Back Better plan is passed, then we could potentially see growth around 4%.
So you're talking about
There's the news, like you see.
nominal GDP. We're going to
You can see
number 6, 7,
business inventories and the housing.
What does that do to the conference board?
Then obviously that's the oil.
Well, certainly that would be positive if a lot of that's driven by consumption, and certainly we're anticipating that. Hopefully, next
All affects gold. You can just trade gold on every single news event if you want. I just like to vary it up, you know.
At least approach that level. And that's really going to be highly dependent upon the evolution of the pandemic, whether or not people are vaccinated, whether or not people feel comfortable getting out there and going on trips, traveling, visiting restaurants, hotels, etc.
Dana, in about an hour, we're going to get those U.S. retail sales for the month of November. We expect an increase. How do you parse out the increase due to inflation from the increase due to consumers
gold's
with
range.
ever a strong pile of cash willing to spend?
Sure. I think the easiest thing is just kind of take that nominal headline and deflate it by the CPI, and you'll see essentially that much of it's probably going to be related to price increases. But still in all, our own survey suggests that consumers, even though they're a little bit dour on the outlook, they're still willing to spend. Certainly our holiday shopping survey said that people were willing to get out there and spend, especially go to malls and do in-person shopping. So we're anticipating that that's
Yeah, it's in a range, isn't it? Waiting for this news.
Does it matter that they're shopping at
If the news is good, we might get a sell, you know, on gold.
And that perhaps they're restricting some of their purchases.
The market over here has been crazy good lately, so.
As easy of a pass-through in some of the inflation.
Well, I think it really
What are they
depends upon the
predicting?
shopper. The person who's
Forecast
shopping at,
83, previous 83, so no change.
Target may
Yeah.
not necessarily be shopping
Now
at
we
the
rely
Walmart.
on market structure.
Certainly, consumers do have pent-up savings that they've had, certainly because we've
Business
had big
inventories
stimulus
forecast
checks. Also,
1.1,
many more
previous
people are
0.7.
employed relative to when they were
Retail
before.
inventory is
But
dropping as
certainly,
well.
we're going to see more caution in terms of people looking for discounts, and certainly if that's not delivered at the
3
big
news
box
events right
stores,
there.
then we're going to
Wow,
see
nice
weaker spending
pushback up.
going
There you
forward.
go.
General statement, what is the strength of the
Hey.
consumer? I have trouble with a weak consumer in a 9% nominal GDP economy.
Well, the thing is that the consumer really isn't weak. It's just that they have soured in their opinion, given the fact that inflation is high. They're still worried about COVID. Cases are rising. We have Omicron in front of us potentially. But when we look at incomes, they're still very high. Many
An arrow here, waiting, pending.
rate is at 4.2.
Push back up.
That
We don't
does
know
not
what this is
signal
going to
a
do.
weak
Yeah.
consumer. It just says that maybe they're just a little bit soured right now in the environment.
So how do you square what
TP is
they say
going to
and what they
be
do?
flat
And we're
of our
talking
KG line here if we're going to take a buy on this.
survey that's actually
See
been
there, look,
deteriorating.
bang.
A slight rebound last month, but not much. At the same time that everyone comes on and says the consumer is incredibly strong and willing to spend.
Well, consumers may say one thing, but what they do is more important. And what they do, we can find out in the retail sales and the PCE data that we receive later on in the month.
Good.
So far, consumers have been getting out there and they've been spending.
US-30, yep, it's on the support now, look, blue zone. So if you was in a sell, this is where you'd get out as soon as you see one of our blue zones form.
Secretary Blinken's
An old TP from a few trades ago, so get rid of that. So now we had this TP here, so obviously we're looking for this. That's what we want.
Positive for COVID-19 upon arrival in Kuala Lumpur. Just an indication, Tom, of how difficult it is right now to get things done, to move around the world.
Anis Ashuki and Derek Wallbank off the Singapore.
Yes, we're in and out on gold. Done it. Brilliant. Beautiful. Hit TP. And what did I get on that? 50 and 45, so another $125. That will do. Pre-news. Happy with that.
Rapid antigen. Can you see the Secretary of State on his phone in the terminal on Air Force 2 or 3 or whatever he flies, doing the Navica, Abbott Labs test?
Hey Tom, travel is getting really difficult. Away from
Perfect. We said it would. You see, just a bit of news was bad, so all this bit of manipulation, some buys, bit of manipulation, and now gold's coming good. And it's took it 30 minutes to get there, 25 minutes, but that there you go.
They're doing something, and it seemed to be the lever they reach for on any given day.
Well, and John, it's just level 4, level 3 in England, France, and the rest of the Europe.
Now wait for the housing news.
But the answer is the variant spreading, and the answer is deaths seem to be somewhat contained, and hospitalizations are problematic.
And yet, when Tom, we asked this question, Lisa, we've done it the last couple of days. Can we
Still a lot of bullish momentum left.
And we'll be told, no, you've got to wait.
Yeah,
wait for longer.
60%. Look at that.
This is to me.
Pushing up.
You talk about messaging and politicians trying to go out there and giving a sense that they're doing something about
That's
it.
perfect.
Wonder, how much people will actually.
US-30 in a range again, just in a perfect position, waiting for the news.
West Ham Arsenal, like
Only sell this if it breaks this zone, and it'll go down lower to our next level.
No, I think it's going to be a lot, Tom.
It's risky because we're already at 17, but if it does, if break, price action will go down. But you can see the candles are squeezed up now.
The game, Tom, or if he'll be on the Bloomberg terminal when the Fed decision comes in and Kit.
5 minutes to go.
I wish that the Emirates had a Bloomberg terminal, because I think Kit's going to be at the Emirates.
I think
Tom,
that sounds like
to watch the Arsenal game.
Sales potential for Bloomberg.
But perhaps to Arsenal Football Club.
You and I and Lisa can go over and do a remote with West Ham
road trip.
Arsenal. And
If you're just tuning in, a member of the press traveling alongside US Secretary of State Antony Blinken on his tour of Southeast Asia tested positive for COVID-19.
Nice.
New York City, this is Bloomberg.
With the first word news, I'm Rishka Gupta. The US death toll from the coronavirus pandemic has now passed 800,000. That's according to data compiled by Johns Hopkins University. More than 200,000 of those deaths occurred after vaccines became widely available last spring. The US has the highest reported death toll of any country. The House has voted to hold former President Trump's last chief of staff in contempt of Congress. Mark Meadows has refused to testify in the Capitol insurrection investigation. He's turned over emails and other records, but Meadows cited executive privilege in refusing to appear before lawmakers. Congress is seeking to increase pressure on China for its treatment of Muslim Uyghurs. The House has passed a bill that would ban goods from the country.
We need to break above that neutral resistance and retest,
Companies can prove they were not
and then we'll see our W, the end of our W pattern.
those allegations. The report says car makers like Volkswagen and General Motors should brace for the global chip shortage to last beyond next year. Munich-based consultancy
RSI is just starting to peak up now, you see. That's why you don't take that. So it's good having that blue zone, you see. You know you're not going to take another sell unless it breaks, or unless RSI comes out of that zone and then goes back in again, you know.
He bought the famed auction house a little more than 2 years ago for $3.7 billion. Sotheby's has had strong online sales during the pandemic and has been moving into digital offerings as well. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Green on the RSI.
Let's see if this all gets smashed back down again. If the news is good, let's have a drop on gold. Our news here now, look, because it's coming. Prediction could be anywhere.
How long till the release?
2 minutes. Here we go.
2 minutes.
Let's see if these both go the same direction. Inventories are meant to look better, 0.7 to 1.1. And obviously if it is 83, that's also good news because it's as predicted, which the market likes. So we'd like to see 2 greens here, and then we can look for buys on the 30 and sells on gold, and if not, vice versa. And then we've got 30 minutes till we trade the oil, and then we're done, and then we'll be back later on. So
I think I'm going to exit my buy positions and get ready for this.
Big news: the United Arab Emirates will switch its weekend to Saturday
pull
and
him
Sunday.
back.
The UAE is breaking rank with the rest of the Gulf region.
Now we are aligned with the world economies.
The working week will be 4.5 days, with Friday, a holy day in Islam, being a half day.
Positioning itself as being an international hub.
I haven't once seen this as a gap or a concern by international investors.
The interesting thing will be to see how the private sector does respond.
The power of Bloomberg.
From the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract.
Are they predicting no change in the housing market?
Union negotiations right now.
Well, we're some time away.
Did I read that right?
yeah, 83, so that'll be good news. Here we go, countdown, 1 minute to go.
We'll begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for
40 seconds to go. Make sure we've got everything loaded up right. Yep. 30 gold. Like I say, look at that. It's waiting. It's pound waiting to move.
I mean, for so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29...
There we go. 20 seconds. Good luck. Let's see what we get. Let's see if we get anything. See if it moves.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line.
Bad news on the business inventories by 0.1%.
Analyze markets. You can enter phrases
And it looks like the housing is as predicted.
Ask a question or visit Search Go.
84, it's actually better than expected, so there you go. So there we are. We'll see if gold dips a little bit, and we'll see if we get any buys on US-30. And we're in. Let it roll. Rolling, rolling, rolling.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation?
Pull it around a little bit.
People were talking about that all day yesterday.
I think what we've seen during this period of time is that
Brilliant.
communicating via video is not
Sent my trades on US-30 and just got out on gold. Might have taken a loss actually. Oh yeah, just because my broker closed, but it's okay. We got 50, what do we get? We got 26 on US-30, 32 on US-30, 10 on gold, and then I lost 3.49, and that was purely my broker not executing quick enough, which is what happens when you're scalping. But hey, we're positive, we're in the green.
I'm working with house money.
Yeah, small loss. You can see here, there you go, look. US-30. News was better than expected. Post that.
They've got a constructive outlook for 2022. From New York, alongside Lisa Braverts and Tom Keene, I'm Jonathan Ferro on this Fed decision day with equities up 3, advancing 0.0.
Hit the TP, look at that, see, as we said.
10 to 145.48. That Fed decision, Tom, 2 p.m. Eastern Time.
It's a big decision. This is not a normal meeting. For those of you on radio and TV, stay with us through the day as well as we drive towards a meeting. And as John mentioned off Steve Englander at Standard Charter, the emphasis taken in the press conference. Our Michael McKee, of course, leading our coverage. Right now,
And there was the,
here on Retail Credit Group to
there you go, look,
us,
spike down
on her take on it.
on gold.
Yeah, well, talking about retail sales, we just
Still, we can still go back in again. There's a possibility of getting back in on
I
this.
want to put that into some perspective, though, because we know that sales are booming across the board. Compare that, though, to a 5-year chart where you start to look at the trend line, and it's actually booming in a really big way. The question is the momentum waning? Because, as Dana mentioned, stimulus, the effective stimulus is coming down.
See if gold pushes down. Yeah, it's pushing down.
We got a pandemic, we got a recovery, and then a pop. Is that all a fiscal pop? You say fiscal policy, retail big?
This has everything to do with the savings rate. And if for our radio audience, essentially you have this major dip in 2020 when everyone was kind of holding on to their funds, putting their cash under their mattress, and then this major pop ahead of this huge trend line. The question here, once again, comes down to the savings rate, which is recovering from the highest in history, even higher, Tom, than the Great Depression era. And now it's kind of coming back down to earth. So the question is, do we continue to see this
perfect. Done. What did we get there? Yay, sweet. So we got 19 and 10 on US-30, and we got 21 and 16 on gold on the sell. There you go, in and out. Perfect scalping again. Got back in again, as I said, because the price action was in the same position as it was when we took it when it opened. So that made up for that little $4 loss. Two more buys and sells.
Yeah, you know, it's great. I think it'd be just wonderful. You set the camera up at the end of the bed, you wake up and just do the show. Maybe that's what we're doing right now.
We're learning, Poonam, we're learning from you every day.
That was it. Perfect. There's your push down.
What will be the distinction?
On the news. If it obviously if it breaks red, goes red here, we're going to sell again. So perfect setup on here. Look, there is another little spike up again.
As you saw them this year, we think the real shift will be towards online, and it'll be more material.
We've got 25 minutes till the
if you start to see
oil news.
Rates rise, which we think will be a key indicator for consumer spending next year. We think spending could derail a little in the back half.
The common idea right now is that consumers have looked through the inflation.
We'll be right back.
Continue to buy
yeah, no problem. No problem.
In case there is any concern about a waning consumer appetite. Are there any signs under the cover that that's starting to shift?
Right now, no. Through the holidays, we've actually seen robust demand. And the one thing I'd point to is promotions, right? Typically in holiday, you're looking for a lot of promotions, great deals, larger discounts. This year, we didn't see that in stores. There were discounts, but they weren't as high as they've been. And consumers are still purchasing. And the trend from November, as far as we've seen, has continued into December.
Is there a bifurcation, Poonam, in the level of the items in terms of how expensive they are? For luxury goods stores doing well and the Walmarts and Targets of the world having a harder time passing along inflation, or is it very broad-based?
Right now, it's very broad-based. I mean, we saw it in the numbers at Walmart and Target recently. Top line has been off the charts across the board for retail. The concern really is margin. That's what we're all concerned about for 4Q and moving into the first half of next year.
Poonam, you've got an outrageous call that in 3 years, we will have 50% of apparel will be online. How does luxury do that? How does, for example, Celine drive everyone to online?
So it's not luxury, it's more apparel. So if you think about the Macy's, the Nordstroms, the American Eagles, the Lululemons, those are the retailers that we think will make a bigger push towards online. And some of them are already there. Nordstrom's at over 40% of their business is online. So they're already making headway. And we heard from Nike, 50% of their sales come from online over the next few years or so.
How does Amazon, not so much defending...
And now it's waiting for the oil and the gas news to come.
Do apparel if they haven't done it before?
They're already doing it. Amazon Fashion, we don't know the numbers, but we know that it's doing really well and they're gaining momentum. Amazon across the board, you know, it's about convenience. It's not about price.
So we'll get oil up on our chart now. Let's have a look.
Bringing new inventory onto the platform every day, and that's what's attracting users.
Oil's been nicely, a nice W and forming a double, form a double top look M pattern.
That's smart. Poonam, always good to catch up. And love the background.
We'll stick on oil now. We've got 22 minutes.
For a long time, US retail sales, US retail has been well behind. Over the last couple of years, they've really caught up. This big omnichannel, so-called omnichannel push, Tom, let me give an example with Nike. Black Friday sales, brought something, got delivered a couple of days later, didn't like it, walked up the road, went to the store, took it back. That's the kind of thing you want, Tom. Click and collect, go around the corner, pick it up. Order it on your phone. You want that ease. Just get rid of all the friction. And most of these big players, Tom, have made a massive effort to do that over the last couple of years.
Is Romain mentioned Adobe, Microsoft, and Netflix before? Do we know, John, or do we underestimate the technological advance that's happened with this pandemic? I think all of us are learning as we go. I don't think we really understand.
My experience, Tom, and I'm conditioned by experience, of course, and Lisa, is that we always underestimate these tech players and continue to do so.
And just how much they've gotten woven into the fabric of every experience. And it's not just technology in terms of ordering it online. It's tracking different customers, understanding their profile, understanding how to cater to them, understanding when they're fraudulent, understanding all of these different things that data now gives retailers the tools for, and the ones that adapt to them the quickest are the ones that are going to be the most successful. And that is the shift, I think, under the headline of just the move to technology.
Went to Bloomingdale's, bought a suit. Then all of a sudden they know my size, my shirt size, Lisa. They start pushing the shirt sizes to me. That shirt in that size, in the color they think I'll like, to my inbox on sale.
Yeah.
Let's go.
You've been tracked, and does that bother you?
It doesn't bother me if it's convenient.
Exactly. And I think that that's what people are finding.
I tell you when it bothers me. When it follows me around to another website. That's when it bothers me. When you're trying to resist the urge to buy something and it follows you somewhere else.
Like what?
So like you go to...
Like what type of thing?
Let's say an item of clothing, maybe some sneakers, whatever it might be. And then you go to the sports page of the Daily Mail website to get up to speed on the Premier League stuff. And then all of a sudden that item of clothing is down the side, just following you.
Yeah, I mean, it can follow you, and on a Fed day, it particularly follows you as you consider the dots moving forward. And John, it's going to follow you and Lisa and me all through the day, looking at the Celine dots.
Tom, look, we've got to do this. Bottom line, here it is. I don't have one of those, but I know someone who does. Tom Keane has a shirt just like that one.
Ooh.
Let's look at the markets. As I say, everyone's getting ready for the Fed. The Fed is going to be, as you can see, in 3 hours 50 minutes. This is when it's good to watch. It's good to practice on demo, scalping as the Fed is talking. Get it up on any station to watch it if you're outside the US, of course. So that's good. And then obviously you've got the actual conference half an hour later. All this is great for scalping, you know. And I'm talking about serious true scalping, no time to set stop losses, risk reward ratios and all that nonsense. I'm talking about in on the trade, on the candle, on the price action, and out when you get green. And that's what true scalping is about. By the time you've set a stop loss and worked out your lot size, it's all over. You're done. You've missed the trade, or you've lost it. So you haven't got time. If you want to trade these kind of high impact news events, especially when they're live talking, it can go either way. There's no predictions. I don't know if I'm going to be buying or selling. All I know is that when he talks, the candles will move and I will get in on them. As soon as I get green, I'm out and wait for the next one to go the opposite way, maybe. You know, that's true scalping. It's using the news to get your pips and to gauge the momentum. So it's not gambling, it's proper analysis. It's knowing how the markets move. So you just pick the thing you want to trade. Could be US-30, because it could be cable, Euro USD, you know, Euro JPY even, or gold, silver, or US-30. They're the kind of the key ones that will move during the Fed's talking. So.
There's multiple places where we think this technology can be applied, perhaps in, I don't know, driving or commanding unmanned ground vehicles or unmanned naval vessels, perhaps providing menu selection and control within a control room environment, maybe in a nuclear power station. All those kind of things are perhaps in the bailiwick of this technology.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Wednesday, Bloomberg surveillance. The Fed decides. What's the Fed's forecast? Will they speed up tapering? Will we see earlier rate hikes? Tune in Wednesday starting at 1:30 Eastern on Bloomberg.
It's a really reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
So, look, crude oil. Boss.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
As opposed to the American Petroleum Institute, which was yesterday, this is the Energy Information Administration, the EIA. And we're looking at a, obviously, massive change from 0.24 to, it's going to be minus 2 million as opposed to 240,000 barrels. So this is going to be interesting. You can plot it, see it on the chart here.
You kind of want to look through some of the, if you like, supply-driven increase in.
And again, if you're trading the US dollar, it's the opposite. If you're trading actually XTI or WTI, you should go with the news result. Excuse me.
Economy that just simply does not need additional accommodation. The Fed is well behind the curve.
Could be slow moving, but is a really good way to get into trading fundamentals because it's a good winner. You can see, looking for it to pull up.
On this Fed Day, Kenneth Rogoff in this hour, and in moments, David Kostin of Goldman Sachs. John Farrow, David Kostin, and others have been right. It's a bull market.
They've been bullish, Tom, and sometimes this year, if there's one criticism, it's you haven't been bullish enough. This equity market is delivered in a massive way this year. Looking ahead to next year, Tom, it's all about multiples, and to what degree does the Federal Reserve bring those multiples down with a move? Today, what are we expecting? An acceleration of the taper. We're expecting to see a couple of hikes in the dot plot for next year and 3 more in the dot plot for the year after that.
John,
where will the surprise come from if we get one?
Well, the surprise may be, as Steve Englander says, the emphasis within the press conference. How do we link, John, what Jerome Powell will say to the somewhat fragility of this great bull market?
To what extent has his base case shifted? I think Steve Englander is so right to think about the emphasis of a central banker. That's where they have the power in the news conference. How data dependent is that first rate hike, Tom? Is it just a straight line from here, accelerate the taper, wrap it up the end of March and let's go? Or is it a case of looking at the inflation data through Q1, assess the degree of deceleration you expect to see in inflation, and then work it out from there? I wonder where he'll push a little bit later in that news conference.
Lisa Brainwat's our bond team prints in Bloomberg News today. 2 killer stories on the bond market, and one of them is about the primal scream needed for the bond market to get the Fed's attention. This is a quiet bond market.
Basically,
Why?
it's going along with what the Fed said 6 months ago, which is transitory. It's saying that we're going to see near-term inflation peak, and then it's going to come way down. And in the meantime, we cannot get neutral rates up to a significant place, or frankly, any place that they have been historically, because of how much debt there is, because of demographics, and because we are going to go back into a more secular stagnation type of paradigm than what we've seen over the past 2 years.
What's the fixed income metric, Lisa, where in Lu Wang's story, markets will need to scream? What's the thing in bonds that will make Jerome Powell scream?
Inverted yield curve, that will make him scream. Also, if you start to see some real volatility in terms of how much things are swinging around and this feeling that people are really unmoored, or potentially a big surge in the back end of the yield curve. But honestly, I don't see it right now because they have had such an influence in distorting this market.
As we get to the data check, John Farrow, a tinge of emotion as we face this December 15th, our final show together this year. All three of us, with our separate lives and our separate travels, always cherish the final 803 data check of our year.
I cherish you, Tom. I really do.
You're so sensitive.
Equity futures unchanged on the S&P.
Do the Dow.
Yields
Dow,
unchanged
negative
too.
25.
12 minutes to go.
144.80. Just for you, Tom, where are we? Down 25. Negative a tenth of 1%. 30. Look at that. 35k. I've got the hat ready. Tom, this from Jonathan Golub, Credit Suisse, just publishing. While Jay Powell has backed away from the term transitory, there is little indication that he believes inflation is sufficiently entrenched to justify inverting the curve and stifling demand. Put differently, we believe the Fed will avoid such restrictive policy, providing continued support for economic growth and risk assets. Jonathan Golub, Tom, just moments ago.
Very good. And of course, everybody recalibrating here as well. Let us start strong. Kenneth Rogoff coming up in this hour with David Kostin, Chief U.S. Strategist at Goldman Sachs. He's been a huge advantage to us in describing a bull market that he needs to be invested in. The big fear right now, David, is this silliness over breadth, 5 stocks going up, everything else terrible, and the fear of a drawdown. Tie the two together.
Well, the subject of a drawdown, of course, will bring happiness to Lisa to hear about
Well,
that.
look at that. Nice drop. Nice entry on the sell there. The only reason I wouldn't take it is because it's sat right in a blue zone. So we're getting close to the oil news anyway, but looking for 100 points on the sell on oil. If it's bad news, obviously 100 points on the buy if it's good news. To measure out and see.
A deeper than average drawdown. Say, for example, instead of a 4% drawdown over time, over a couple month period, you may likely get an 8% drawdown. That's what history would suggest once there's such a significant narrowing of breadth in the market. However, if you think about where you end the, not just the year, but over that period of time, equity prices likely to be higher. Why is that the case? All of the focus today and your conversations before have been about the announcement of the Fed today and the dot plot and the tapering. All those are important. But the fundamental issue in equities has been this year, you've had a huge spike in commodities. You've had supply chain disruption. You've had difficulty in companies finding and keeping employees. And you've had the variants, the Delta and the Omicron, all these issues, yet profit margins in the United States across every sector are at record high levels. Managements have been very nimble in basically dealing with these issues. And so we look into 2022, earnings up around 8%. Largely, the economy is still growing at a decelerating pace, margins increasing slightly. That is the story for 2022. You have a flat valuation, in my opinion. That's how you get to 5,100, or up roughly 10%, maybe 11% total return when you add in dividend yield.
So, David, just to be clear, I'm not rooting for a downdraft here, but I do think a lot of people have been talking about how things look perilously valued. Your argument is they are not, because you're going to get the ongoing margin, a sort of incremental growth in terms of how much they're expanding. What's the down case scenario, just because I want to be in brand here? What's the sense that we're going to get some kind of rate hike or savings accounts that get depleted and the consumers say, no mas, we're not going to accept and give you money and not only pay you enough for more inflation, but then more?
So, Lisa, the disconnect and the discussion with most portfolio managers relates to the situation that fast growing companies that are fast profit forecast, fast profit growth, and high margin companies.
Now for this,
trade at
US-30 look, forming perfectly RW. Right. Out. Bit of rejection off here, where we can get some buys. Again, EP still is valid. Gold obviously is ranging now.
Sort of 9 times enterprise value to sales. What are we talking
Nothing doing anything really. So it might, if it breaks below all this lot, we might look for a sell. But very risky zone it's in at the moment.
Having 20% margins, others basically companies losing money. And the issue is, as rates go higher, and to be clear, that is the forecast of Goldman Sachs, that 10-year treasury yields will climb towards around 2% at the end of next year. In that environment, it is exceedingly unlikely that you get the same valuation for these two groups of stocks. And the idea the market is unforgiving if companies which have high revenue growth and all the valuation is dependent on that revenue growth, as compared with companies where there's rapid revenue growth, but there's also high profit margins to work with. That's the central tension in most conversations with fund managers, because so many of the money-losing, loss-making growth stocks are very much in the meme specter or the sort of glamour stocks in the market that everyone has been so benefited from in the profit over the last couple of years in terms of performance.
David, the obsession now, as you know, is to look forward 12 months. Can we just reflect on the last 12 months briefly? I remember about 12 months ago looking at your original forecast for the S&P 500.
11 minutes to go.
4,300. And when that first came out, I think the S&P was in and around 3,500. And we looked at your forecast.
And I'm back.
JP Morgan's
Nice
a
one.
little bit higher, and everybody sat there and said, come on, this is ridiculous. We're really going to have a year that big. We broke
Got a coffee inside you now.
before we got to the end of the year. David, I want to understand from your standpoint, when we play this game each and every year at this time of year, when you look back 12 months, what's been the biggest lesson for you and the team as you speak to clients?
Well, we've got 5 minutes to go. We'll try and trade this oil news. Oil is pulled back nicely, back down again to 69. It's good that trade last night, the Aussie 200, got it spot on. There were nice wins. I'll have a look at doing another setup tonight as well.
And that's been a key driver of why you've had earnings, and it's really been an earnings-led market. I think that's the most important development. It has not been a
looking to push down, which is good. We can get another sell on it. Breaks this would be cool.
And that is the same outlook that
EP had set. You get a sell.
Climbing around 8%. The other aspect that was surprising to me is all year long, and when you've invited me on as a guest, most of this year, we've been looking and handicapping the probability of a higher corporate tax rate. We were assuming most of this year there would be some legislation passed, some reconciliation legislation passed this year and affecting and headwind to profit growth next year. But now it looks as though whatever legislation
5 minutes, 6 minutes to go, 5 minutes to go.
I do expect some legislation
Watch. Let's look at our US-30 is forming now. Perfect look. It's doing a nice.
company profits until 2023. So basically that extra
It's sat on our trend line now, so we're hoping for that second leg, like you say, W.
So profit margins and the lack of an increase.
Once the RSI goes green, gets in here, you can get in.
David, your
On a buy.
is you say
You just got to wait for this news to play out.
Own high growth, own high margin, own high profit stocks, and there's X number of those as well. Are they under-owned or over-owned right now?
Well, it depends if you want to talk about the hedge fund community or the mutual fund community. So, Tom, that makes a difference.
Please make
in
that
terms of
distinction.
Which clients we're looking at. So if you look at the hedge fund community, the leverage community, basically owning the leading stocks in the market. That's
Need the RSI to creep above our average line there, look.
We look at this every 90 days and been looking at
Push
this
on
since
up.
2001. And that's been pretty much in the last 4 or 5 years, the same stocks, the leading stocks in the market, largest companies in the market, have been dominating their performance and their portfolios. And that's pretty much in
Bitcoin now 46.9. Ditched a bit more now. 46.9, 46, yeah, 47.
And here we're looking at large cap
Looking.
core managers.
Doge 17 cents, down from 22.23.
But in terms of your core
Cheap
mutual fund
is
managers,
down 4%. So yeah, everything's just.
because they're such a
I
significant.
think it's going to be affected by this the Fed decision and interest rate as well, as much as anything else, as much as to do with COVID.
From Mr. Costin, and it compares and contrasts to what we saw with the Nifty 50 a zillion years ago.
Just getting some news, Tom, I want to break, and then we'll return back to David Costin. The Prime Minister Boris Johnson holding a news conference from Downing Street at 5 p.m. local time, so midday Eastern time, Tom, to talk about Omicron. The reporting out of the UK right now, not expecting to get new measures, expecting an update on the booster program. So one for the diary a little bit later.
Booster program that you can't get. There's 6,000 people queuing online to try and book the booster. That's how bad it is in the UK. On the NHS app, you can't walk in now and get it. They cancelled that last week. So it was 6,000. You get queue in the queue. That's just to book the appointment. So this is why we'll end up going back to a lockdown, because they can't get their boosters out fast enough. Everyone's decided to go and get it now, and there's a big log jam. So I can see us going into lockdown until everyone's up to speed on the booster. Because no one could be bothered to be in a queue, and wait 6,000 people online before then you've got to go and queue to go and get your appointment.
Reasonably attractive does depend on the extremely low interest rate environment that we have, whether that's corporate bond yields, tips, inflation, protected securities, or even nominal treasury yields. In all those interest rate related metrics, equities look reasonably attractive. So, Jonathan, an important construct to think about is that in history, it shows 6 months before a Fed hike, 6 months after a Fed hike. That 1 year period, basically you have multiples flat. In every one of the tightening regimes that you've seen over time, that's been the experience. And so that happens to match up pretty closely with calendar year 22, coincidentally. You're starting now, it's about 6 months before the expected first hike, and 6 months after would, of course, put you at the end of 2022. That's not the forecast for a stable multiple. That's not upon which we make the base.
Right, let's crack on. Let's have a look. Here we go. 2 minutes to go. Get onto the oil chart again. See what we can get. RSI is just peaking up. So we don't know which way it's going to go. Really matter to us. We'll just go with the result. So, see if it beats this predicted.
You'll be basically back to a roughly stable valuation.
We see a massive change. Arrows.
But still reasonably attractive in a low interest
Goodbye. I don't judge anything. I go what it says.
The whole body of work to just an index level call, but fantastic on the index level through much of the
It's going to be good.
To you and the team. Good to catch up as always. Enjoy the holidays, David. Thank you, sir. David Costin there of Goldman Sachs. Tom, they were looking for 40.
Let's see if it pushes up gold down as well. We'll see if it affects gold. I mean, it's on the chart, look, as one to be affected. There you go, 0.5, 2.7.
Is that corporate America will adapt. That is the #1 thing I see off of all the legacy of Abby Joseph Cohen.
This constructive view on earnings, that's what's really delivered through 2021. Will it do the same in 22? From New York City on this Fed decision day with Tom Keene.
Obviously, gold should go the same way as a result of oil, i.e. if the news is better than expected, obviously the dollar drops, so gold should go up and vice versa. So whichever way you go with oil, gold should go the same way as it. Counter, correlation, that's how it should be. Obviously, the result is the opposite for the dollar or any dollar pairs, any forex pairs you trade in. Should be going the opposite way if you're going to trade that, but I'm going to trade just the WTI, and I might, oil, it might move. Problem with gold is it's sat on some support, so it's got to be a result to make it a decent result to make it move. You can see the RSI is going back to the neutral zone, so it's not the greatest setup at the moment. You might get a few pips, whereas oil itself is obviously nicely set up, be a continuation sell or pull back buy. So this is a far nicer chart to look at than this. As you can see, it's a bit of a mess. So always take that into consideration. There you go. Look at that. Perfect. There's the move on up. That.
One of the most widely used vaccines in the world, China's Sinovac, doesn't provide enough antibodies to neutralize the Omicron variant. That's according to researchers in Hong Kong. Those findings may have sweeping consequences for millions of people who are relying on the shot to protect them against COVID.
Got up. All the news came out. Crude oil, look at that, better than expected.
1% in the last year, driven by higher costs for clothing, gasoline and used cars. The data may be enough to persuade the BOE to raise interest rates this Thursday. Global News 24 hours a day.
Beautiful, that spike, look at that.
Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
That's what it's all about.
This is the Bernanke legacy of Federal Reserve. We think they're going to be very careful. But the irony, though, of all of this is the market is freaking out because the Fed is getting really considering, tapering at a more aggressive pace. The market has been dying for the Fed to taper.
There's always something to complain about, John.
Anything really.
There. Oppenheimer, chief investment strategist, the most bullish on the street. Year end on the S&P into next year, looking for 53.30, 30 points higher than Brian Bowski of BMO. And the equity market up a point this morning, Tom, on the S&P futures. Going nowhere. Yields going nowhere too. 144.45 on 10s.
See if it fills that wick. That's great. An RSI 53. You can always catch a little bit of the pullback as well as it draws down. You can have buys and sells in there.
It's so hard to do what Stolfus, Costin, Dwyer, Gino Martin Adams have done, which is to participate in the market.
So you just ideally I just want which is 10 pips. So you always have to wait, fine, because you're never going to get in on that initial spike. You saw that spike before the news was announced. That's just the way markets go with the manipulations, the way it always is. Good. Yeah. Not 100 points. Perfect. Get you like $50. 5. Good candle. This candle here. And good. You missed that, and you got on this candle. It ended. There's your 100. What must it be? I always want to go behind down here. Ideally, don't need to go as crazy as that, but that's where I would have it. If that pushes it back on, that was a good hell of a result. So it really doesn't react to it. Stock market doesn't really move.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is
nice if it gets to that 70 level. Perfect.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer.
See if this pushes up a bit more. Beautiful spike, beautiful. Always takes its time. Yeah, that initial flash spike, which you couldn't have got in on unless you're an insider and you know the result. Like I say, was expected to be, good, but it was even better by another 2 million barrels. So but want the RSI, ideally want the RSI to get that level here, look. It's where you'd be looking to take profit, possibly. That kind of level. Trying to get up there now. We've had a lot of red all day with the RSI as well, so that's good. Broke, and without the news, this is where you would be taking a buy anyway. So that's been a good setup. Well, there we go. That was our final trade of the day. Another nice win, and I'll post the results in the trading group. So again, that's a good 3 hours we've been at it, and we've done best part of 30 odd trades. We've took basically 3 losses out of 30 odd trades today. So very good day scalping. The major news day, and obviously later on we've still got this Fed interest rate to change as well, so I'll be back online in my group to trade this, and then we move on to tomorrow. And tomorrow be around to trade some of this PMI market manufacturing news for the euro, just after the London Open, and then the market composite for the UK 100 in the afternoon, and then we've got the housing building permits and initial jobless claims as well, and manufacturing PMI. So loads of news events to try and trade tomorrow as well. Great week for scalping fundamentals, and as long as you use it in conjunction with our axe trading system, it keeps you on the right side. You see that oil has smashed our TP beautifully, done really well with that. With that trade. So we just closed our 4 positions on it there. We got 18, 26, 22 and 18, so another about $130. Thanks to Justin for joining me from the States early in the morning. There you go. There's the oil news. Proof how to trade. Like I say, oil to me is one of the easiest ones to trade on fundamentals. If you want to get into trading fundamentals using a TA system as well, then this is probably the best thing to learn to trade. So thank you for joining. We traded the open, we traded the pre-market news, the after news, oil, and we'll get ready for the Fed decision. So thanks for joining, and hit that like button, and please subscribe and share and tell people about our true scalping and how we achieve our results. And you can go to the website, like I say, www.mohawkforex.com for more information on to join our VIP group. And until the next live stream, obviously stay safe, avoid Omicron, and trade safe as well. Until then, see you guys later. Take care.